Good morning, everyone. I'm truly delighted to have this opportunity to be speaking to this distinguished group and to have received the invitation from President Lavie and from the Modai family. It's a great honor to be giving a lecture in that particular name. What I've been asked to speak about this morning is innovation and economic growth. Now, we all well know, as Dr. Modai indicated, that the global economy and the global financial markets are dealing with many issues this year and for the past several years. But my comments this morning will concentrate perhaps on something that is most important, and that is long-term economic growth. Now, there are many different ways to look at economies. We like to measure things. Sometimes we look at something called GDP, gross domestic product. Sometimes we look at the health of the stock market. But what I'm going to be spending most of my time on in this presentation are other measures of economic success and economic frustration, specifically as it relates to people. I'll be looking at unemployment rates. I'll be looking at job creation, and we'll also be looking at income. So when we think about how an economy is doing, perhaps this is a very good place to start. This particular chart is showing data for the United States, and this is the unemployment rate. Now, overall in the United States, the unemployment rate is approximately 8.2%. which by post-Great Depression standards is extremely high in the US. But something I hope that you see in this particular slide is that the unemployment rate varies tremendously based upon how much schooling you have had. So for example, the lines that are at, I don't know if this is pointers working, there we go. The lines at the top represent the unemployment rate for people with less education, and the lines at the bottom, the unemployment rate for people with more education. And so, in the United States, overall unemployment, 8.2%, but if you have a college or a university degree, the likelihood is that your unemployment rate is not 8.2, but 4% or lower. However, if you have only a high school diploma or less, it's very likely that your unemployment rate is in the double digits. And at one point in this economic period of difficulty following the financial crisis, the unemployment rate was about 15% for those people without education. And so we now have one piece of information that suggests that an important part of economic policy, an important part of economic goals in order to create a population that can work and a population that can do well in supporting itself is to make sure that people are given proper education. This is something that we're quite focused on in the United States and, of course, here in Israel as well. There's another thing to look at, and that is the gaps in employment, or in this case, unemployment, by types of groups in the United States. And you'll see that we've broken out different ethnic groups, different racial groups in the United States. And while we can show these data, the single most important factor, again, is education. It's not who you are, it's not the color of your skin, it's not where you live, but rather whether you've been well educated. There's another factor as well, which we find among the most disturbing, and that is the unemployment rate varies significantly based upon age. Older people have unemployment rates averaging about 6% in the United States. Again, the average is more than 8. So who has the even higher rate of unemployment? It's the young people. People in the category of ages 20 to 24 have an unemployment rate of 14 to 15%. This is something that is quite disturbing because what we have seen in economies where youth unemployment has stayed high for a long time is very often these people have a difficult time getting into the labor force at the right level, given their skills. They never really catch up. And in some cases, they become an underclass. So it's something that is of concern. Am I depressing you yet? Excellent. What I'm trying to do is to show you the depth of the problem, where the problems are, because we need to know that before we can start talking about possible solutions. Here's another way to look at it, but all of this is related. This is income levels in the United States. Now, in the United States, the average income level is actually quite high. It's about double what it is here in Israel. But there is an enormous differentiation based upon income. And so, for example, the top line represents income levels for households where the head of household has a 4-year college degree or better. That income level is $85,000 per year. Not too shabby. $85,000 per year. But for those families where the head of household hasn't finished high school, the income level is $20,000 per year. There is this wide variation that is related to education, and we see the same sort of pattern not just in Israel as well, but in many other countries. You may also notice, if you have good eyes, that there has been a downturn in almost every category. So since the beginning of the financial crisis, regardless of how much education the family may have, average income levels have declined, but they have declined the least for families with the best education. Again, not a surprise, because the unemployment rates are so much lower for those families. Well, what about Israel? We see exactly the same pattern. These are data that we have gotten from the Bank of Israel, and what they are looking at is the poverty rate by education level. For families where schooling has been 8 years or less, there is a 50% chance that that family's income is below the poverty level. But for those families where there has been a college education, fewer than 10% of the families are below the poverty level. Very strong patterns that we see over and over again. We also see that the larger the family, the more likely they are to live in poverty. Why is that? The larger the family, very strong correlation with low education and therefore low income. And just as in the United States, where there's variation by population group, the sort of people, the demographics, there's a wide variation here in Israel as well, where the highest poverty rates belong to those families that have the largest number of children and the lowest level of education. So it is the ultra-Orthodox and the Arab communities, both of whom have about 60% of their families below the poverty line. In the general population, it's just about 12 or 13%. So very strong pattern. What do you do about it? Well, I'm not an Israeli analyst. I can show you the data. I may have some personal conclusions, but that's not my area of expertise. So what I'd like to do is to talk in greater detail about the United States, because I do think that increasingly there are very strong relationships between what we see in large developed economies like the United States, by the way, the world's single largest economy still, and still the economy of the world's most productive workers and most highly paid workers. Very often it's easy to make comments about, well, the United States isn't what it used to be. We're still number one by many categories, and I'm very proud of that. But what my point is that as the Israeli economy has become more sophisticated, more developed, and as more and more people have become better educated, as the Israeli economy has become more global, depending more on exports of high-quality goods. It's not just agricultural products any longer, but some of the wonderful products that come from graduates of Technion or from the companies that Technion graduates are now running. What we see are more and more similarities between the Israeli economy and the US economy. And so I think some of the data I'll be showing you now, while it is taken from the US, will have implications. This particular slide is something that is really designed for an audience of economists. But I know that you are all very clever people, and so I'm going to spend a few moments explaining to you what we're looking at. This is a breakdown of productivity. Now, productivity is a concept that many people have a common sense understanding of. We know that more productivity is good, less productivity is not so good, but why is it? There are some very technical measurements of what productivity is. How much can a person produce in an hour, or how much can a person produce in a year? And what we know is that how productive a person can be depends upon many things. It depends upon the individual, but what we're looking at here on this slide is a breakdown of other things that determine how productive a person is. And why do I care about this? It sounds like such a boring economics term. Because if you could identify only one variable, forget GDP, forget CPI, forget all of those other hundreds of economic variables you may have heard about, the one that matters the most is productivity. Because when productivity is high, a nation's unemployment goes down, a nation's income level goes up, it is a wealthier nation in all senses of the word. So productivity is the single most important variable in determining long-term economic success. And that's why we're focused on it. That's why we talk so much about innovation, because it is innovation that makes workers more productive and then makes the economy more successful. So how does that get done? Well, there are many different factors involved, but there are two that are most important in driving the productivity of a nation. The two most important inputs are capital and labor. Let's talk about capital first. Capital is investment. In one sense, it's the sort of equipment that a company gives its workers to use. If a worker has old, unsafe equipment, they tend not to be very productive. But when workers are given the state-of-the-art equipment, or they're working in a factory where they feel safe because they know they're being productive, the productivity of each worker soars. And the other important component is what we put into the worker themselves. It's not just what we put into the workplace in terms of equipment, but what do we put into the worker themselves? Education, training, retraining, a sense of safety, a sense of comfort in the workplace. All of these are critically important. And as we take a look at what has driven productivity in the United States, again, the US is the most productive nation on the planet by a very significant margin. What we basically see is that in recent years, the bottom line is capital. So since the end of the financial crisis, US companies have been investing very heavily in capital equipment. The economy is only growing 1 or 2% a year, but companies are increasing the amount they invest in their businesses, in that capital, by about 8% a year. It has been absolutely phenomenal to see that at one level, companies have pretty good confidence in the future. And the other thing that has happened, which makes us a little less happy, is that the labor piece of productivity has not grown as much. Now, on a long-term basis, capital is not just the equipment. It's not just the machines we're giving people to use. It's the long-term investment we make in research. It's the long-term investment we make in what's called R&D, and that's what Technion is so good at. It's the basic research. The next step is the translational research. How do you turn those basic insights, how do you turn that scientific thought process into something that actually works. And then, of course, how do you get it into the hands of workers to make them more productive so that they can earn more and as a nation become wealthier? This is really the issue, but as I just showed you, what we're seeing in the United States, even though our workers are perhaps 30% more productive than the average worker in other developed economies, we are still seeing a notable problem in our labor markets. And what is that? We can't get the unemployment rate down fast enough. And what I'm showing you here is another slice of unemployment. Usually we talk about the unemployment rate. And the unemployment rate is a ratio. It's the number of unemployed divided by the number of people who either have jobs or are looking for jobs. So when the unemployment rate is high, we don't feel very good. But here's another way to look at it, and that is the actual number of jobs that have been lost. Okay? The actual number of jobs that have been lost. And I'm showing you different economic cycles. The standard economic cycle in the United States is this one. It looks like the upside down V, or excuse me, it looks like a V. And in the standard cycle, a recession lasts about 2 years. At the worst, you lose about 4% of the jobs, but within 2 years, everybody's back to work. That's what we are accustomed to in the United States, but this is what we have now, and that is this. We lost 6% of the jobs, and here we are 4 years later, and we've only recovered a few of those jobs. We're still down 4%. This is the crux of the problem in the United States. This is our primary economic problem. Companies are doing well, their profits are good, they're investing heavily in equipment, but our workers are not finding jobs. Why is that? Let me give you some reasons. First, there are a number of young men who lost their jobs from the construction business. They made decisions 8 years ago, 10 years ago, to forget about college. And instead of getting a better education, they went to work right away in the construction industry because the average hourly wage was high until they had no wage. That is one reason for the high unemployment. I'm going to come back to this in a moment. Second reason has to do with globalization of the economy. Some of our people who are working in manufacturing or other categories where things can be produced more cheaply elsewhere in the world have also lost their jobs. By the way, there's still lots of manufacturing jobs in the United States, but they're not the same jobs that existed 10 or 20 years ago. The average manufacturing job in the United States, which is today empty, there are jobs but no people to fill them, are typically the manufacturing jobs that require advanced math or engineering. There are approximately 1.5 million of those jobs in the United States looking for workers. So we have our issues. And the third reason that the economic recovery and the job recovery has been slow has to do, of course, with the ongoing repair from the financial crisis. But let me go back to the first point, which had to do with education. The United States has a bit of a problem that we are not seeing in Israel. What is it? Ever since the data began to be collected at the beginning of the 20th century, the United States was always number one in terms of the percentage of adults with a college or a university degree. We were always number one. We aren't anymore. Why? Because beginning about 10 years ago, young men decided not to go to college, or not to go to college as much as they had previously. By the way, young women are going to school in larger proportions. So the likelihood of a young woman having a college degree today is higher than it was 10 years ago, but the likelihood for a young man to have a college degree has actually gone down. This is not a good thing for us. What's the other problem? Well, in addition to our four-year institutions of higher learning beyond secondary school, we also have something that we call community colleges in the United States, and they offer 2-year degrees, not 4-year degrees, and they also offer a great deal of training and retraining that is vocational in nature. So, for example, in the United States, if you are interested in becoming a computer repair person or an electrician or some other trained, skilled, technical person, you go to a community college. Community colleges are run by state and local governments. So let me introduce one other problem we have. You've probably heard about the large budget deficit in the United States. I know a number of you in the room are Americans. We're really not thrilled about having deficits that approach $1 trillion every year. But as you know, the federal government can run a deficit for the course of many years. State and local governments in the United States are prevented by law from doing so. Let me repeat that. Federal government can run the deficit for a long time. State and local governments must balance their budgets each and every year. And so what we're seeing over the last 3 years in particular is that state and local governments are dealing with their own budget crises by cutting back spending on what? Mainly education. So here we have government decisions that are in exactly the wrong direction. They're cutting back education spending on K through 12, they're firing teachers, and they're also cutting back spending on community colleges, and in some states that have fabulous, or used to have fabulous, state university systems, like California and other places, that's also something that has been hurt by budget cuts. I will add a quick parenthesis, and that is Yitzhak Modai knew that economic planning consisted of making good long-term decisions. I would argue that the decisions being made today, particularly at the state and local level with regard to education, is not a good economic decision. In fact, it's something that will hurt us in terms of our long-term recovery. Have I depressed you enough? Yes, okay, let's talk about the good things. On this particular slide, we're looking at the relationship between good scientific research and innovation. We all sort of think, and maybe over the last 2 or 3 days you've heard about all the wonderful basic research that can happen in any number of categories, but how does that actually translate into economic growth? What are the mechanisms that are available to turn the good ideas of university professors and basic scientific researchers into jobs and economic growth? Well, there are many such mechanisms, and I wanted to show you the relationship and the success scores of various nations, particularly two at the very top of the success chart, Israel and the United States. So it's not just the quantity of the research that's being done as a percentage of GDP, it's, let's call it the hit rate. It's the batting ratio. It's fabulous. And so congratulations to both nations. And we also see that Switzerland is up there. Why? It's all the pharmaceutical industry that are based in Switzerland. But for Israel and the United States, it's much more diverse, which of course leads to a healthier, more balanced economic outcome, and that's fabulous. For those of you who are interested in the global economy, I'd like to show you two of the nations that are not doing so well on this scale, India and China. So we talk a lot about the fact that India and China are now economic powerhouses. Well, they are in one way, but not another. They are doing very well in areas that require low-cost labor, right? They're very good at manufacturing cheap stuff. They're not so good at innovation. They're not so good at producing what we in the economics profession call high value-added goods and services. Those are the things that you export that nobody else can produce. These are the things that you export or you produce that have high profit margins, and therefore you can pay your workers a great deal more for it. So this scale for me is quite interesting in terms of looking at the quality of sustainable economic growth. Germany, Israel, the United States, among the highest ranked. The other thing that we know is that the wages in these categories, the ones that are propelled by research and innovation, are much higher. And again, my apologies, I am showing you here data that apply to the United States, I think you'll be a little bit impressed by these numbers. So for example, since the year 2000, in the United States, and we're actually taking a slice here of New York, total private salaries since 2000 have increased about 33%. Not too bad, 33%. In the technology sector, they're up another 10 percentage points, up more than 42%. In addition, the starting point was somewhat different. So, for example, it's the light blue bars, I don't know if you can see those, that represent the total private sector, and the dark blue bar represents the average annual wage in the technology sector. So right now in the city of New York, which I think you all know is probably a high wage area because it's a high cost of living area, the average person earns $80,000 a year. In high tech, it's $110,000 a year, okay? A $30,000 difference, pretty substantial. So I asked the rhetorical question, why is it that Mayor Michael Bloomberg is trying to attract more technology companies and more technology innovation and more technology jobs to the city of New York? There's your answer. Because they are high quality and highly paid. And by the way, in the city of New York, we have one other motivation, and that is to diversify our economy. The New York economy, not just New York City, but New York State, used to be heavily dominated by financial services. And we all know financial services can be somewhat volatile. So what is the mayor doing? And something he started in 2002, he didn't wait for the financial crisis, was to encourage businesses and sectors and industries that could do well in New York, encourage them to come. And by the way, they're almost all, but not totally, high educated, highly paid areas. Technology, for sure, media and entertainment, where New York is number one, has encouraged things like education, universities, medical research, and so on. But let's be honest, and that is not everybody is going to be a rocket scientist. Not everyone is going to be a brain surgeon, and not everybody is going to be a successful software entrepreneur. So one of the metrics of success for a good economy is also one that creates good jobs for everyone. And in the United States, and in New York in particular, the focus has been on creating jobs for people who have high school degrees, but want to work hard and are diligent. And so the United States now has, instead of Disney in Orlando, the #1 tourist destination in the United States is New York City, by a very significant margin. It creates an enormous number of jobs in the hotel business, the restaurant business, somebody talked about Times Square, the theater business, entertainment, and so on. And so what we're looking at is a diversification of the economy, which of course is something that is happening in Israel as well. Now, I've given you a little more detail here in terms of the technology industry in New York. And the point here is that not everybody who works in technology is a computer scientist. Not everybody is an electrical engineer. And so all of these represent jobs in the technology sector. Again, this is overall private. It's about $60,000 a year. But if you are in technology in a management position, you earn about $138,000. There are a number of other positions, but take a look at some of these jobs, also in technology, but office and administrative support, clerical positions, and so on. If those sectors are doing well, there are jobs for people with other types of training. And this is what we're trying to do. And if you've seen the data for the Cornell Technion campus, you'll see that the projected job creation is throughout the wage spectrum. We expect, for example, in the first couple of years that there will be approximately 10,000 jobs for people who will be working, clerical people, offices, construction jobs, and so on. The idea is to bolster the entire economy, but to use technology as the anchor. Just showing what the job growth has been recently. So where do we see the job creation in New York? Well, I keep talking about technology, but technology has different pieces. And what we find is that whether it's Israel or the United States or any other country, you can say technology, but you have to say technology related to what? The computers are not creating value by themselves. They have to be implemented in a particular industry for a particular purpose, and that is the benefit. So in a place like New York, we see that computers and high-tech jobs are being used, yes, for internet, but it's internet publishing and broadcasting and web search, where there are a huge number of jobs. It's industrial design, it's customized computer programming, it's media, it's advertising, and increasingly it's healthcare. We believe that one of the strongest areas of growth for computers and technology will be healthcare, the provision of healthcare and healthcare research. Now, I've spoken a lot about what we've done, but remember there were two pieces. There's labor and there's capital. So is there money coming? The answer is yes. And something that will be very important to Israel and something that I'll be talking about at another lecture in a couple of days has to do with the flow of capital into Israel from the United States and elsewhere. Since the financial crisis, that flow of capital has been impeded. Investors around the world have been aiming to invest only in what they think are the safest possible investments. And what are those? U.S. Treasuries, gold, and lately people have been buying Treasury securities from Germany, okay? Let me just talk a little bit about the mathematics of that. If you get a 1% yield on a U.S. Treasury, that may not be such a good investment. You're not losing money, but what happens to something we call the opportunity cost? Are there other opportunities out there that might be of greater value? I raise this as a rhetorical question. The other thing about the mathematics is that when yields start high and they go down, the price of a bond starts low and goes up. But if the yield is already as low as it's going to go, the price of the bond can't go any higher. And in fact, if interest rates go up, the price of bonds goes down. And so what we are now beginning to see among investors who have a little more, shall I call it, intestinal fortitude, they have stronger stomachs, is that they're beginning to invest in things that they think have a little more risk and a little more return. And so we see a return of venture capital. Venture capital has been critically important here in Israel to the development of many industries, not just high tech, but also some of the pharmaceutical areas and a whole host of other businesses. And as a consequence of the financial crisis, a lot of the flow of equity capital, venture capital, and so on just kind of dried up. We are now seeing that it's picking up. In the United States, and I was in California in Silicon Valley just a couple of weeks ago, we see that there's now enthusiasm. There are many reasons, but I'll give you two in general. First, there's this whole question of opportunity cost. Is it really safe to be putting your money only in safe instruments? Number two, the valuations are very appealing. Although the stock market has gone up in the United States, the PE ratio, that is the price to earnings ratio, is about 13 times earnings. Normally, it's about 18 times earnings, which means that whatever the level of earnings is, investors are usually willing to pay about 18 times that amount to own a stock. Now they're willing to pay only 13 times, suggesting that equities are priced not to perfection, but they're already pricing in a lot of nervousness and a lot of worry. And we also see enthusiasm for venture capital. Institutional investors in the United States and elsewhere have a lot of cash sitting on the sidelines. And many of them are saying, I am now ready to make not a short-term decision about what's going to do well in the stock market between now and next Wednesday, but rather a real long-term decision. And those decisions include venture capital, which by definition are investments that you may have to wait a few years before you see how they turned out. We also see that companies who by and large have very strong balance sheets, they've been generating a lot of cash, they are also now seeing good value. And they are buying in their shares. They're also doing a lot of merger and acquisition activity. Because if they can buy a competitor for 13 times earnings, that's cheaper than it would be to build the equivalent operating capacity from scratch. So we're beginning to see some things moving in the right. Now, to conclude, and truly in the spirit of people who were great economic thinkers and great economic planners and making good decisions on behalf of governments so it would benefit their countries and their people, I wanted to show you in reverse chronological order, that is, the newest first, some of the things that are happening in the United States in which there have been partnerships between public, that is government, and private, and what has generated as a consequence. And I start with some things you've probably been talking about for the last 2 or 3 days, so I won't spend too much time on it. But in the United States, one of the primary ways the government provides money for basic research is through our universities, through something called the National Science Foundation. Now, the NSF has been around for decades, and the predecessors have been around even before. And they have been responsible for helping build companies like Google and Intel and Microsoft. And I selected those 3 because I know they all have huge signs on the road leading up to Haifa. The National Institutes of Health, which has been around for decades, and actually the predecessors for the National Institutes of Health, which has been around since 1820 in the United States, has been responsible for helping fund the basic research of many health-related companies, including Teva. NASA. 1958, we think about, well, what good is it to send the stuff up into space? Well, if you think about so many of the things that have been developed since 1958, the special materials that we all now just rely on, the synthetics, the Velcro, the polycarbonate, the things that go in our eyeglasses, the stuff that go in our tennis rackets, and of course, more important uses than that. Much of the development of computer systems related to NASA and so on. And I have not even talked about satellite technology and how important that is, not just for communications, but also for national security. The interstate highway system, okay, all of this represented major investments by government in cooperation with private entities. Without the highway system in the United States, we would not have had the integrated economy, the better diversified economy that we've had. We would have had smaller regional economies with much greater volatility. Not a good thing. And then some of my favorites. 1865, land-grant colleges, and oh, by the way, Cornell University. What's a land-grant college? The federal government set aside large chunks of public land and said, here we will build a university. 18 1965, and they provided the funding for that as well. I would like to add that when this law was passed in the United States, we were still fighting the Civil War. So in a period of enormous political disruption, enormous economic strain, Abraham Lincoln, looking to the future, said, this is something we have to do. Education is our #1 priority. They had another priority, 1863, the building of the Transcontinental Railroad. How critical that was to connect the eastern states of the U.S. to the West, and of course, everything in between. Again, this was funded almost entirely through the period of the Civil War, and it represented a combination of public and private. The Erie Canal, those of you who are from the East Coast of the United States may have heard of it. Most people don't realize how important it was. The Erie Canal and other canals connected the Atlantic Ocean to the Midwest of the United States. Before that, there was no way to get the corn and the wheat and all of those important agricultural products to the East Coast of the United States. We don't think today about how critical that was, but it was absolutely essential to the economic success of the U.S. And just one final, and that is the combination that we see today. Public-private, Technion, Cornell, and New York City. This represents an enormous commitment on the part of the city of New York, as you've heard, a huge amount of land, $100 million. It represents a large commitment from Cornell University and its supporters of $2 billion, a good deal of which has already been raised, and of course the commitment by Technion. And it is this combination that we think will make it that much more powerful, helpful for the city of New York, for Cornell University, for the United States, and very importantly, of course, for this community and for the State of Israel. And with that happy note, I'm going to stop, and I thank you very much. Thank you.